So the government has just announced that they're releasing a further 10,000 spots for the financial year 2027, 26-27. That's for the Help to Buy scheme.
It's disappointing to read. It's like making an announcement for the sake of making an announcement.
I guess some of the flaws that I don't like with this scheme is, firstly, the government's owning a portion of your home.
10,000 new places is pretty pathetic. I think the scheme's pretty bad anyway.
A lot of buyers agents, a lot of people will sell this as this unlimited borrowing capacity loophole. I don't believe for a second that it was done to lower house prices because of, as I said, mathematically it just doesn't make sense.
No.
My advice for first home buyers is ignore the headlines. If you buy now or in 3 months' time, you are not going to give a shit about that in 10 years' time.
No.
They've also amended the income caps. So you have to earn less than 100, well, previously less than 100,000 for a single, and 160 was for a single parent or a couple. So they've raised that from 100,000 to 103
For a single.
and from 160 to 165 for a joint applicant or a single parent.
Yeah.
Not a huge increase, to be honest.
I mean, it's disappointing to read. It's like making an announcement for the sake of making an announcement.
Yeah.
10,000 new places is pretty pathetic. I think the scheme's pretty bad anyway, but at least they're trying to do something with the scheme to help
trying to keep it
first home
alive.
buyers get into the market. They're only allocating 10,000 places and then only increasing by $3,000 for a single and $5,000 for joint, which is basically $2,500 each. They haven't even increased it in line with the minimum wage, which they recently increased.
Yep. Inflation's well outstripped that as well.
Inflation's well above that. I mean, it's just a disappointing outcome.
I guess the disappointing thing for me is, the budget, the recent budget was all about helping first home buyers and getting into the market, all these things. I think if they were serious about it, they would have increased the caps by 20,000 or 30,000 income caps. Because to put it in perspective, a 103,000 income for a single, no dependents, no debts, gives you a borrowing capacity of around $550,000.
Well, and again, I think I would even argue that it's probably best to not have any income caps on it. And I know that they're trying to incentivize the people who genuinely need help to try and get into the market.
Correct.
But a first home buyer is a first home buyer.
Yes.
Like they're talking about this sort of wealth inequality. Well, I mean, the first home buyer who has a decent income now has probably sacrificed a little bit of their life for some reason. Have they been a medical student for so many years? Have they been living at home with parents? Like, what have they done in their career to get to professionally where they are now, to the income, to increase them to this sort of past what you would typically define as a first home buyer purchase bracket, but they've got a higher income. I think it's penalising the people who've gone through sacrifices but have a higher income.
100%, and 103 isn't enough for me. I don't think. So yeah, $103,000, no dependents, no debts. Borrowing capacity is about 550. Granted, you're not going to buy much for 550 anywhere in Australia at the moment. So this is where this scheme comes into it. So if you add 30% onto that for an existing home, which is they basically buy into the home with you, that 30% will then take you up to a purchase price of $780, which is more acceptable. It's still not great. Or add the 40%, it takes it up to about $915 for a new build. Yeah. So they are more respectable numbers at that. But I guess some of the flaws that I don't like with this scheme is, firstly, the government's owning a portion of your home. Yeah. So they then get a benefit from the capital growth. Yeah. Although they're trying to kill capital growth in Australia, we'll ignore that. So basically, they own a portion of your property. Now, there is clauses within that then that as soon as you earn over a set amount, that needs to start to be repaid. Yeah. So no, I haven't had a client that's actually got to that stage yet. Yeah. But it essentially means that once you get to a certain point, you need to either be able to refinance it and pay back the entire amount.
And look, it's great that it allows people to buy a home, but it's a risk that people need to be aware of when they're entering into it.
As soon as you get an upgraded job, or you get that promotion, or you finish your uni, or whatever it is, you got to be aware that as soon as you lodge that tax return and that your income goes above a certain bracket, it is going to trigger certain clauses that you need to repay that 30 or 40%. Yeah. So everyone needs to be aware of that. Overall, it does avoid LMI. It does help low income earners, but it's not enough for me. 10,000 spots isn't enough, and I don't think 103,000 for a single is enough.
It doesn't really help the first home buyers who are establishing careers and their families and a lifestyle in the major cities.
Yeah.
None of this is going to apply for people in Sydney.
Yeah.
You can't buy there for that much.
I think one thing I need to explain to people as well, I couldn't give a shit about Labor or Liberal or One Nation or anything. I think all government parties are fucked, to be honest. I think they're self-serving.
Yeah.
So anything I am saying today isn't because I'm favouring one party.
Yeah.
I'm looking at these policies as policies, forgetting who the fuck built them.
Yeah.
So next one, again, I'm a numbers person. So when, moving on from the Help to Buy. Now, the self-managed super fund changes was an interesting one for me last week because the superannuation pool, so there's a $12.6 trillion property market in Australia.
And for anyone who's listening who's a first home buyer, you might not be looking at self-managed super fund lending, but basically what the government's just announced is that they'll abolish self-managed super fund lending for residential property.
And they've sold that, they've sold it to, I guess, to the media and to Australians that they've made these changes to help first home buyers. So I wanted to explain how that is actually mathematically near impossible for that to happen based on what the changes were existing and what I think the actual reasons are why they've done it.
Yeah.
So currently out of the $12.6 trillion market, it's 0.5% owned through a self-managed super fund. It's mathematically impossible for that fraction to be able to change a property market.
If you think that 0.5% can influence any market,
it won't.
It never will.
So then you start looking at why. So who's the beneficiary of these changes? So the change to a self-managed super fund isn't enough to be able to change the property market, but the flow of funds back into industry funds is enough for them to benefit.
It's a massive amount of capital to go back into this.
Correct.
To the industry funds.
So what happened when they made the changes to the budget? There was a spike in self-managed super fund creations, and because people will always find a way. Yeah. Let's be clear with that. People will always find a way to invest. So yes, there was a spike, and I think that worried the industry funds. I honestly think that worried the industry funds because they started thinking, shit, they've closed one door and opened up another door.
Yeah.
And their flow, so industry funds, they rely on contribution flow. So the more flow they're getting, the more they're earning. That's how they operate.
It's almost like a subscription business.
Correct.
Guaranteed income on a recurring basis.
So once that starts to drop, they start to worry.
Yeah.
Now, I need to put my tinfoil hat on for this part, but majority of industry funds, or a big portion of industry funds, are actually run by unions. So the trustee for self-managed for industry funds is union based. Now, not all of them, and I don't think there's a single one where they're 100% owned by or run by a union, but there is a fair portion. Now, if you look at the chain, a lot of ex-Labor government politicians actually move into superannuation. So Wayne Swan, who's an ex-federal, I think he was the treasurer or something, wasn't he?
I don't
For
know.
Labor, he's actually the head of CBUS. So you follow the chain here, and you start to connect the dots a little bit.
I mean, I haven't looked into these superannuation funds, but I would suspect that a lot of them are moving into the rent-to-build schemes as well.
They are, and they also push a lot of industry funds have basically what's called an infrastructure fund, and that infrastructure fund isn't controlled by the government, but it's used by the government. So they use that for the build to rent. They use it for building infrastructure to build houses,
airports, toll roads.
A huge portion of it is actually going to America at the moment as well.
Yeah,
so they're investing it offshore in
and that's
infrastructure.
The thing, it's not infrastructure that's got. They want returns for their shareholders.
Yeah.
And if the best returns aren't in Australia, the money's not going to be allocated into Australia. If it is allocated into Australia, obviously that infrastructure is going to benefit so that the economy and which will then lead to house price growth in particular areas. But that infrastructure is, creating jobs, it's increasing incomes, and that money then flows into mortgages. But I think the big thing that most people are missing with this is that, again with the investments for mum and dad investors, Anthony Albanese, all of the boomers, everyone's had all of these negative gearing benefits and CGT discounts benefits to get them to sort of to try and move them outside of just earning a wage and trying to sort of increase their wealth outside of just being employed. And self-managed super fund was a vehicle for some people to do that. Now they've also stripped that away for first home buyers, because now, yes, they're trying to help first home buyers get into the market, but once they get into the market, what else do they do then to try and increase their wealth and set themselves up for retirement? They're purely just relying on the self-managed super fund.
Yeah, I think, I don't know. I don't believe for a second that it was done to lower house prices because of, as I said, mathematically it just doesn't make sense.
No.
I think that the budget opened up a door that they wanted to close very quickly, and they have done so.
Yeah.
Whether if they had left that door open, it would have driven the property market, I don't believe so.
And
the average person doesn't have enough in their super fund to be able to do that.
Yeah.
It's mostly people in their 40s and 50s that are getting into them because they've got enough.
Right. Yeah.
I don't know. I think there's more to it. I'd love to hear what people's thoughts are on it. Throw it in the comments what you think the real reason is. But
we've just gone through the Help to Buy scheme and then the changes in the self-managed super fund recently. I think, and I'm not sure if you agree, another option would have been just lowering the serviceability buffers for first-time buyers.
So instead of me just whinging about what they've changed, here's some things that I've put together that I think would actually work really well. So the biggest restraining factor at the moment is affordability.
Yeah.
So right now, let's say interest rates are 6%. APRA has imposed. So APRA is a governing body of the banks. It's a regulator. So they govern bank policies. So right now they're governed to have a 3% buffer on interest rates. So to account for interest rates to go up. Now we're sitting at 6%. Things are getting assessed at 9%.
Yeah.
So number one thing that I think should have changed is the government should have basically enforced APRA to reduce that assessment rate from 3% to 1%.
Just for first home
buyers only.
Yeah.
That would have been huge.
Yeah.
All of a sudden.
Because they're already offering a guarantee with the schemes that they're delivering. They're giving you a LMI waiver.
Correct.
Which is the loan to value ratio.
Yeah.
So if they're lowering the serviceability, it's another way of giving APRA or the banks
that's a couple $100 grand. In a lot of cases, it's a couple $100 grand more borrowing capacity.
And it's not just affordability of property that's the issue; it's serviceability.
Yes.
So if you've got $100,000, you can borrow $600,000 as sort of a rough estimate.
Yeah.
If they lowered that serviceability buffer by 2%, that debt to income ratio is probably going to increase to like 700,000.
Yeah.
Or 1 to 7.
So I think that would have changed a lot.
And that's not unusual. APRA's had that policy before.
Correct.
So it's something that's already
they reduced that buffer substantially during COVID.
Yeah. And not only did we have cheap money, we had a reduced buffer
Serviceability was incredible.
Yeah.
Now, next one is probably going to upset a few property bros here, but I'd like to close the accountant letter loophole for basically what happens is a lot of buyers agents, a lot of people will sell this as this unlimited borrowing capacity loophole. So essentially
for investors.
So for property investors. So you go out and you buy a property through a trust or a company, a holding trust or a company not trading, and you sit it on the side. Now, when you go to buy property number 2, you get a letter from your accountant to say that property number 1 that's held in a company or trust is trading profitably and doesn't cost you anything. So then it's excluded from serviceability. So then they're starting fresh again. And rinse and repeat this, and that's how these people are getting 30, 40 properties because they've got all these accountants' letters to say that the others are servicing completely fine.
Yeah.
Now, we've run the numbers on this on several occasions. The average is around 6 or 7 years before these properties are naturally becoming cash flow positive, yet these accountants are writing letters a year in most cases. Now, unless you're putting a granny flat on or doing something like that, it's near impossible to be cash flow positive, depending on your deposit, of course.
Yeah.
So I think that needs to be closed. We need to stop this
and banks aren't going to do that. Banks
no.
are incentivized to lend money.
Yeah.
It has to be by the regulator.
Not their problem.
Yeah.
So APRA need to close that.
Yeah.
So again, regulation could have changed a lot of things.
Yeah.
So, and the last one that I would have liked to have seen instead of the aggressive changes they made to the investment sector was to escalate the buffer rates based on multiple properties. So if you're a first-time investor, so this would have helped rent vesting. So you buy your first property, you get the capital gains tax and negative gearing change, like you get 100% of those as they were previously, but your second property, you lose it and you don't have them anymore. But also that buffer rate that I talked about previously, that increases.
Yeah.
So instead of being 3% for your second property, it might become 6%.
Yeah.
And then the next one's 12%.
Yeah.
So it aggressively stops you from being able to purchase 10 properties.
And that's really who they wanted to take out of the market, because we've said it multiple times before. 70% of investors are mum and dads who own one property.
Correct.
One investment
they're
property.
Teachers, they're fucking nurses,
The rest of the market, the biggest segment of the rest of the market, it holds two properties.
Yep.
It's a very small portion of people who own more, but those people who own more have 10 or more.
Yeah, and they're buying them through trusts.
And they're buying them through this loophole.
And
so that portion of the market who are buying 10, 20, 30, 40 properties, that would have been a bigger effect or a bigger portion of the market than that self-managed super fund lending.
Yeah. Now, I'll make it clear as well. I am 100% for slowing down the property market. I think the speed that it's outstripping wage increases was too much. And I'm thinking about my children and their children. At the speed that property prices were increasing in Australia was too much. Yeah. Way too much. So something did need to happen. I think the media needs to calm down a little bit. Prices have dropped. Fucking full. I think when you are looking at your property prices, don't look at it on a 12-month basis. Look at it on a 3-year or a 5-year or a 10-year. Stop looking at it on a monthly even. Like it's ridiculous.
It's almost working against each other, because what the government's trying to do is make it more affordable and incentivize first home buyers to get into the market.
Yeah.
But the media is working against them, and first home buyers are like, house prices are dropping.
Yeah, well, that
if
creates
we buy
panic.
it, well, then we go into negative equity, and what happens next? Because the government's trying to slow down price growth, and the media is saying that prices are dropping. So then it creates hesitation. Yeah, we already know that 60% of first home buyers that get pre-approvals don't proceed with the purchase. If we're trying to incentivize first home buyers to get into the market, they need confidence. And the confidence isn't coming from the people leading.
But it's all self-serving. You know, you look at newspaper number 1 and it's like, how good is the current government? And then newspaper 2 is like, property prices are falling and like we're all screwed.
Carl Stefanovic's sect.
Yeah, they're all self-serving. Let's be clear with that. So my advice for first home buyers is ignore the headlines. If you buy now or in 3 months' time, you are not going to give a shit about that in 10 years' time. No. It's get into the market now. One small change can change the market overnight. As soon as rates drop even once, consumer confidence will increase. You might start missing out on properties again.
And anyone who goes into my first home buyer system, they're going to know exactly how to analyze a market, and they don't have to rely on the bullshit headlines that are out there. Yeah. They'll have all the information in front of them to actually have an informed decision and go, cool, I'm confident to purchase.
So if you are looking to buy your first home shortly, get in contact with Aaron or myself. Aaron can help you with the property side and I can help you with the finance side. Get a plan in place and just buy. Turn off the news at 6 o'clock every night.
News isn't doing anything.
Don't read the papers. That's a miserable piece of reading material. So, when you're looking at property prices, start looking at 3-year, 5-year, 10-year. Don't look at 12 months because it's not a clear indication of what's actually happening.
To wrap up, self-managed super fund lending isn't going to change much.
No.
And the changes to the Help to Buy scheme isn't going to change much as well.
Then that's it. All right, thank you.
See you in the next one.